Hi
Hi
everyone,
everyone, welcome back
welcome
to
back to
Infinity
Infinity
Wealth.
Wealth. How are we all doing? Now we've had a very interesting week, not in the market. So again, we're back to the stocks this week on this video. And we hope first and foremost you're enjoying this new sort of format of content. I know that the last video got quite a few views, so it must be popular. It's got quite a few likes as well. But we have a special guest, but obviously we know who the special guest is. None other than Dr. Martin Patel with us today. How are you doing, Martin?
Yeah, very good, Kiki. Very
Good,
good.
good.
So I think I'll be doing a market summary and a review after you've
Yeah,
talked about your bits
yeah.
and bobs. Yeah.
As we can all see, Martin is live with us from Wall
New
Street.
York, mate. New York Stock Exchange, mate.
Brilliant, love it, I love it. Also, yeah, as Martin mentioned, so Martin will be doing a nice stock market update for us, with his amazing skills. And what I will be doing is I'll just be following up from last week's two stocks that we spoke about, and what's basically happened, what we're looking at in the future now, what's realistic, what isn't, and we're going to get into all that juicy stuff in a second. But first, I've got three announcements to make. Okay, the first announcement is if this video can get to 200 views, now this is going to be your job to share it to your friends, to investors. If this video will get 200 views, I will send each and every single one of you that message me a list of stocks that I'm currently looking at and also investing in. So these are those kind of ones that I'm on a day-to-day basis tracking, all sorts. So if you want that, if you want to get your hands on that, and that's only going out to people
Well
that
worth it. Well
it's
worth it.
definitely worth it. So
Yeah.
you get this video to 200 views and you will get your hands on that. And
Yeah.
also, obviously, make sure if you haven't done already and you're watching our videos, you make sure you subscribe to this channel. You make sure
Yeah.
you press that bell icon and smash the like button, because the way the algorithm works, you will not see our videos consistently if you do not press the like button. So
Yeah.
you gotta do that. Cool. So announcement number two is we are going to do a live Zoom session in December with a Q&A with a maximum of 10 people only. So if you want to be on the live panel of that Zoom call, email us at info, and the info will come here, info@infinitywealth.me. So it's info@infinitywealth.me with the title, with the subject title as live Zoom panel seat, with your full name and the questions you may want to ask us. And obviously, if the most, we're expecting there to be a big turnout of numbers, so we can only select 10 people. But
Yeah.
if you're not able to make it, we will definitely try to get your questions answered. So make sure you do put your questions in the email when you send it to us. And third and foremost, Martin's next talk, which you do not want to miss, on the IMN London online event, is on the 25th of November. Those of you that have subscribed to our website have already got an email, so check your email. I will be sending another one, but if you haven't and you haven't subscribed, subscribe to the website, but also the link will be in the description below. It's a free event, so by all means,
absolutely free. Yeah.
join. And Martin, I think you're going to be discussing like diversified investments.
Yeah, it's diverse, and how important it is to look at and all the opportunities that I'm seeing just being thrown up right now.
Brilliant.
Because of the volatility. People are missing the main problem is, Kiki, people are missing a huge opportunity at the moment. Yeah, and we want them to tell them about the opportunities that are coming in,
100%. I completely feel you.
Yeah.
So yeah, definitely. And this is an event you shouldn't miss. So everyone's at home. You got no excuse on the 25th of November. So make sure you sign up. Link in the description. Cool. So now that's all the announcements out of the way. Let's get into first and foremost, I'm going to provide you a short update on what happened over the weekend. And Martin will also fill in with a few bits here and there with me. But basically, the last two stocks we were looking at were NIO and XPENG. Again, if you haven't seen that video, it will come up now. So make sure you go and watch that video to understand what they are. So NIO and XPENG, in terms of how they did, XPENG shot up literally the day after we released the video. We're not claiming anything.
The Kiki effect, yay!
The day after, literally, XPENG shot up by 40%, which is insane. From the 11th. Yeah, from the 11th of November, we had a high of $41, around $42, and then 13th of November, we had a record breaking of $54, which is basically an average of 30% gain overall in 2 days. And as I mentioned, the earnings were coming out of both companies. XPENG's came out on 13th November, and again, earnings came out positive. The corporate-wide gross profit margins were 4.6%. It's the first time that actually XPENG has produced a positive value, so it looks like it's sort of heading in the right direction. XPENG is still small. Their quarterly sales totaled about 293 million, but all that jazz you can look into online on the data. I'm not going to go into all of that. As an overall, it was positive. And NIO, on the other hand, didn't do as well, but I mean, still fantastically well. NIO shot up by nearly 15%. From the 11th of November, a high of around $33 up to a record breaking of $51 on the 13th of November. Again, a significant, the first one was a 54% gain, and this one was a 30% gain over 2 days. I got my numbers mixed up there. Yeah. So now the NIO stock is worth about 65 billion. So it's incredible numbers that they're achieving, and again, their earnings also came up positive. Again, you can look at all that. The only one thing that they had is they had a loss of 12 cents per share from 667 million in sales, but sales rose by 146% year over year, basically. So from the previous year. So again, everything is looking positive for these two companies. So overall, we're looking quite sort of positive on the spectrum. There were the two things that we were waiting for, really, weren't we, Martin? Is these sort of earnings reports to sort of like justify why these massive rallies were happening.
Yeah.
Right? So
I mean, we were talking, weren't we? We were talking about the Chinese market, and how big that Chinese market is. It's absolutely colossal. It's far bigger than think of population in China. The middle class is growing and growing. So there's going to be more and more demand for these electrical cars. So I can see, the numbers getting bigger and bigger. I mean, if you look at the tech companies that came out of China, look at them now. Tencent, look at them. Alibaba, look at them. Right? Most people are going, oh yeah, look at them now. So the companies that you're mentioning, we're looking at a longer term. You're going to get you're going to get volatility. You always get volatility in the market. 100%. So you will get some volatility there as well. But
100%. I completely agree, and I think, again, like you said, it's that sort of market that has a lot of demand, so they're responding to the demand. So it's not a complete shock. But overall, if we look at it, we're looking at this from a day-to-day perspective. But overall, on this month, compared to October, NIO is up by 68%, and XPENG is up by 140% this month compared to October. And this is data based upon the date of 13th November, where we saw the all-time highs. So obviously, a lot of you are going to be questioning now, like, okay, these are massive numbers, the banks barely give me 0.5%, and you're talking about 140% in a month. What are you talking about? Is this sustainable? Is this really? Are we going to are we really going to continue seeing these sort of massive highs? And the one thing I want to relate to is in this story is I always like to back everything that I look into with sort of case studies and things that happened in the past. And the most recent thing I can look into, which is the most sort of almost a reflective of this, is Tesla. Really, what was Tesla at last year and where is it at now? And the insane amount of growth we've seen, and we know, like, Tesla just at the sort of beginning of their game, so they're only going to get better and better. They need to make more profits, they need to make more turnovers. Now, the way these companies are, they have a lot of costs because they try to produce on a high scale. They're producing in an industry which is electric vehicles, and I mean, obviously, producing in China, they're capable of producing efficiencies with their costs. But even still, it's quite expensive compared to making a car. The kind of things that go into it, the production, because it's not done on such a mass scale. That's why, especially in England, electric cars aren't the most cheapest cars, because they're new in the industry. The supply isn't a massive amount compared to normal cars. So is it really sustainable? And are we going to keep seeing 140% year on year? The truth is, you have to obviously be analytical in the market. No one can predict the market. No one knows what a company is going to do, what they're going to do. But if we just sort of stack up what's happening here, the Chinese government, are planning, and not only planning, they have already started helping finance this sort of electric vehicle market. Brian Gu, who's the president of XPENG, was saying that the Chinese EV market is different to the US. It isn't just about cost comparisons being between electric and gas powered cars. Congestion and air quality are big factors. Things also like
especially in China.
Yeah, exactly. Their restrictions on tax. They have the tax subsidies and government. What do you call taxation on using gas cars? It makes it expensive. I mean, just look at London, congestion charge, ULEZ, these sort of similar things. It just makes it a bomb now. So you don't want to have a petrol diesel car. So the same sort of things are happening, and the government is really heavily invested in these sort of markets. So we can sort of start to see why are these companies being so highly rated and heavily invested in by big investors? Because really the backing is there. Everybody's vision is towards everybody needs electric cars now. I mean, Boris today announced in the UK that by 2030 that all petrol and diesel cars sales will stop completely. So it looks like all these governments, not just China, that are trying to sort of edge this way. So there definitely is a massive market for it, and so that sort of is why I sort of get my justification for why these things are going so high. They're in early stages. There is massive talk. There's a lot of talk about this industry. A lot of governments are making moves. So from an investor's perspective, it makes sense for them. There is obviously a demand, not just from the consumer perspective, but from the government sort of standpoint. There is a massive demand for these cars. So that is where I see. In terms of future, I mean, I'm no fortune teller, so I can't guarantee if there's 140% gains every single month. We just have to see that, guys. That's the reality. We as investors have to also learn to be analysts and analyzing the market. There's no point jumping into something if you're not able to study it, right?
Yeah, but I want to add just one thing, Kiki. It's often these sort of stocks, they're more momentum traders, right?
Yeah.
They're more momentum driven.
Oh, 100%.
Yeah, everyone wants to jump on the bandwagon. And like you said, if those people are interested out there to actually acquire some of these shares, we normally wait for pullbacks, don't we? We wait for pullbacks down to 20-day moving averages, or if it's a fast moving and we're constantly trading, that it's a 5-day moving average. But mainly, the 20-day moving average, if it hits there, then it's a case of just reloading and seeing if we can ride the next wave up.
Yeah.
But when it goes parabolic, it's time to actually take your foot off the gas a little bit and just let it do what it needs to do. So this is where I think people need to be a little bit wiser and understand that, it's had some huge parabolic moves, both these stocks, which is absolutely a brilliant call on your behalf, right? On your part, because I think you nailed it exactly. The timing was exactly right. And just went completely parabolic. And it's then a case of, it's gone parabolic. Let's just wait for a pullback and then add a little bit more. So if you're not actually in the stock, you've got to just wait for it to calm down a little bit, because it will calm down. Everything calms down. Once it then starts calming down, then to actually say, well, taking a longer term horizon now, I'm going to actually add a few of these stocks. And once again, we're not giving financial advice or anything else, but it is a case of trying to help you guys to make the most of your money and to grow your wealth, really.
Definitely. 100% agree. No, not at all. Again, to just add to that, it's literally, again, from your experience and what we're speaking about, and this is just learnings that we can see from. But to sort of add on to that point, and that is basically where we're at now. And one big very basic investment advice always, whatever you're buying, is you never buy high. You're never going to go in and purchase on the bull run when the things are going parabolic and things are going up. We're always going to wait for that retracement. So obviously, fortunate for the people that did watch the video when it came out and got them because they had some great gains. But if you were at the end of it and you saw it, that is not the time to buy, guys. You don't know when this thing's going to plummet down. You don't know what, especially if you're trading. If you're trading these markets, you're going to get burnt. You're going to get burnt, basically. If you're not careful on these things. So definitely, it's really, really good advice there, Martin. And actually on that front, what I'll do is I'll just show you the charts and what's basically happened at the moment with the sort of price consolidations that we're seeing. So if I just how do I share my screen here? Share screen. Here we go. Perfect. So Can you see my screen, Martin?
No, I can see it, mate. Yeah.
Perfect.
Yep.
Awesome. That means everybody else can see it. Cool.
Yep.
So
whoa,
if we start
look at that candle, man.
Look at that candle.
So another one above it as well.
Yeah, there is.
Yeah.
There is. So if I just put this into perspective here, this is so if we are looking at we made the video on, I believe it was the 11th. So I made the video on the 11th of November. So I go down to the 11th of November, which is this candlestick here that we're looking at. Okay, so this candlestick is the 11th of November. So from here, this is that massive increase. So on XPENG, it was 50%.
Sorry, Kiki. Prior to the 11th of November, we actually spoke about it. Before you did that video, the week before, if you remember, we did a web chat very similar to this.
Yeah.
And you mentioned it at the time, so it was a week earlier as well.
Yeah, so even a week earlier. Yeah. So we've gone from this basically region here to coming up to the all-time high. And now, if we look at this on a sort of lower time frame, well, this is on a 4-hour candle on a 4-hour time frame. The momentum's definitely slowed down. We're not continuing this massive bull run that we have. We've hit a high, and we're looking to prices still around the moving averages. So this is the sort of consolidation sort of zones. Yeah. And to be honest with you, I wouldn't even be surprised if we see a bit more of a dip to maybe retest these regions here. So I wouldn't.
Where your cursor is at the moment, Kiki, just raise it a little bit where the gap is. You'll probably attempt to try and fill the gap. I would say, but that lower candle, that would be the first support level. Really, is that a 4-hour chart, or is that?
This is a 4-hour. Yeah, this is a 4-hour. Yeah. Indeed. Yeah. This is a 4-hour. So these are the sort of consolidation periods, and depending on if you're trading or stock investing, you will have different entries. You will have different points. You'll have different risk management, etc. But these are the kind of pullbacks that we're talking about. Maybe even deeper, as we already mentioned, to be looking at buying opportunities. Again, you don't want to be buying when we're getting to these highs, when things are when all the
don't FOMO in. Don't FOMO in.
Yeah.
Do not whatever you do not FOMO in. And if those people don't know what FOMO is, it's fear of missing out, right? Yeah. It's part of human nature. Yeah. But do not FOMO into these things. Just take your time. Watch them and to say, well, it's had a little retrace, and I'm going to take some now, basically. Buy some now.
Yep. And the sort of rule I go by always is, as soon as you start to see multiple articles talking about NIO booming or anything booming in that case. I mean, we saw the same thing with Bitcoin when it hit all-time highs, right? Because the trade went on for the bull run went on for such a long time. The articles got very confident, saying, "Oh yeah, you should now invest. It's going to continue going up. It's going to continue rocketing. What are we in for tomorrow?" That is when there's a red alert. When loads of articles are now reading about it, it means that these sort of things are going to start. Most of the time, this is what normally happens. So again, we've slowed down. We came up. Maybe investors got excited again, bought here, came down. I mean, if you're trading, this is not obviously the best time. You want to be looking for these good entries. Then time your entry, and that's a good time to basically get into the trade. But again, we're talking more about investing in stocks here. So for me personally, I would, on this sort of pullback, add more to my position. Depends again on your risk appetite, essentially. So just to quickly look over NIO as well. So very similar thing. You'll see that these two charts are moving quite parallel to each other, to be honest with you. It's the same type of investors. It's the same, just like how we paired these two. There's a lot of people that have paired these two, their eyes on these two, because they're two big players in the Chinese market right now. Again, reached all-time high. We're now in consolidation sort of regions.
Yeah.
This is on a 2-hour candlestick now. So yeah, these are the opportunities that you want to look for. When the market dips, we buy within go. So, and also balancing it out with your analysis on, okay, is this sustainable? Is it going to go? Do I think there's an investment? And this is what stock investing is about. You need to understand the companies. Don't just invest because an article told you that this company is good, or you've read somewhere told you. You need to do your research into why. Think of it like this. Think of it, this is your friend's business, and you're giving your hard-earned cash to this friend's business. Yeah. He needs to give you a valid reason as to why this business is going to do great, and you need to be confident in that business. And to give. The same reason why an investor would work with you on a JV partnership. You need to make him confident that, look, this is what we're doing. These are the exit strategies. You need to give all the education and the options. So take that similar sort of investment approach and apply.
That's a good point, Kiki. Because when you're buying stocks or anything, you're owning it. So you're becoming a part share owner in that particular stock, basically, or that particular company. Right?
100%. And
that's what shares are. You're taking a section of that company, very small section, but you're owning that. Do you want to be owning that company?
Yeah, exactly. 100%, exactly. And if you take that mindset on, I think definitely you'll see the markets in a much better light, and you'll take them more seriously for sure. Yeah. And you'll see hopefully good gains. But yeah, so just sort of wrapping up on that now. We've looked at the charts. So, that's what's sort of happening now. It could be a good time to get involved. Again, from my own perspective, it wouldn't make any sense to me as to why I would not want to get involved, because of the clear data in front of me, everything I want to see, and depending on my risk appetite. And again, don't forget, this is still classed as one of the riskier investments and more speculative. This is no way are we, and as am I saying, or Martin is saying, that this is, yes, it's got all the data, all the backing behind. This is not a Microsoft, guys. This is not a Microsoft that's been around for years and it's got the backing of data. This is definitely still a speculative investment. Again, we've just looked at and done our research. We're looking at where the market is going, and we've got certain risk appetites. Me and Martin have got very different risk appetites for these sort of investments. Again, so this is something that you have to make sure that you have within yourself.
Yeah, can I add a couple of things? Right. Look, if you're a younger, I don't want to go back to the age thing, right? But if you are a younger person, right, you should actually be looking at trying to grow your wealth quicker. Right. Whereas if you're someone of my age group, you're looking at more investment, longer term horizons and more investments. Right. So younger. I don't even, because I momentum trade as well. I know how to momentum trade. But if you're younger, then you want to actually perhaps look at momentum trading, which is what these things are. And momentum trading and that trend following can go on for a very, very long time, basically. But and then I look at it on a completely different perspective, because I understand that side, but I also look at it on a investment and these would not be classified as investments necessarily. They are, but they are. So let's say if I had £100, or let's say £1,000, some people, if you're younger, you're going to dump it all in and see if you can double your money, right? If you're older, you're going to say, well, actually, I'm going to split that £1,000 into small 25% chunks. I'm going to allocate this to this bit, this to that bit, and this to that bit, right?
100%. No, definitely. I think that's a really good way to put it, actually. Again, obvious reasons. Younger people, you have less responsibilities, you have less things to worry about and concern about. It's just something you got that freedom to take a bit more risks. So if you got that time and you're like me, between sort of age.
And one more thing, right? And I know we talk about speculation and stuff like that. Without risk, there is no reward. Doesn't matter what you do in life. Doesn't matter what you do in life. Right? Without risk, there is no reward. Right? The levels of risk are different on different things. You walk out the door, you could be hit by a car. There's risk in everything that we do. Life is an adventure, right? That adventure starts with, you know what? I understand those risks. It's understanding and absorbing those risks, and then moving on from there and saying, I understand those risks. I understand this could go wrong, but I'm comfortable in that going wrong. But that's what I want to do.
100%, exactly. Completely agree. Cool. So so just sort of looking ahead, that NIO expect to deliver 16,500 to 70,000 vehicles in the fourth quarter. Delivery should translate to around $930 million in sales. So that's a big number. XPENG also plans to expand globally, have started exporting very small quantities of its vehicle to Norway. The US is also a potential market too, but of course that will take its time for obvious reasons between China and USA. And more growth for XPENG is on the way, as they're planning to open a second manufacturing plant. But that I think so. Sort of a wrap on the EV. I think we've spoken 2 weeks now. Enough of EV market. And obviously that's not all in terms of the future of it. There will be updates in the future, but I think for next week, We'll go into 2 new stocks from completely different industry. I'll do the same thing as I done last week. I'll analyze 2 new stocks, do chart breakdowns, and Martin will also be alongside. And that's pretty much from the EV side.
Yeah. Okay. Well, on my perspective, I'm going to do a market recap on what's been happening over the last 2 weeks and a week. If you watched our video that we did, I think it was about 2 weeks ago, I talked the FTSE 100 at that stage was predominantly. I am looking at the FTSE because I think it's undervalued. I think the American markets are very overvalued. But if you look at what's been going on, the FTSE, when we were talking, was 5,500, floating around there. And I said, guys, you should be buying this right now, right? You should be buying this because I saw it as a double bottom. If you actually look at the graph, it looks like a double bottom. Massive candle. I thought you got to be and that's why I immediately went to people saying, go and buy this shit now, because you can make money and it's not risky. Right. It carries less risk down here than buying it up here. Right. So now the FTSE has actually come to 6,400. It's hovering around 6,400 to 5. So almost 900 points, basically. It did go to 1,000, but almost 900 points is a lot. Right. And I talked about, I talked about shares like BP, SmithKline, Glaxo, if you remember, high dividend stocks. And all of a sudden, as soon as I'd mentioned it, someone light bulb went off somewhere, and it wasn't necessarily timing. But it was something I'm looking at. When I'm looking at it, I don't know when it's going to happen, but I know it will happen, right? Exactly. And when I was looking at it, it was more of a case of, okay, so the reopening trade. Now they call it the reopening trade. So if we look at what's been happening over the last 2 weeks, tech stocks have actually fallen back a little bit. Well, I haven't fallen back, but they've been lagging. Whereas before, the tech stocks were actually leading the whole market, they're lagging the whole market now. More of the reopening trades. So because of the vaccine, now I wasn't aware that the vaccine was coming out, but I'd mentioned it. If you watch the video, I'd said to you, listen, it's not going to be that we'll never use oil again. If you remember my exact words, that we will never do oil, we'll never drive again, we'll never use oil again. These are extremes which are absolutely absurd, right? It's because as soon as a vaccine is found, things will bounce. So once the first vaccine was Pfizer about 2 weeks ago, and the market absolutely rocketed up, on that Pfizer news. Then this week on the Monday, it was Moderna. That came out and said, well, we've got 94% efficacy, whereas Pfizer was saying 90% efficacy, and the stock market rose like a bullet, right? If you looked at BP, right, when we said it, prior to all this news coming out, BP was trading at 192. I bought at 192 or 190. I had money in the game. If it dropped more, I was going to buy more, right? Fortunately, I did the video, jumped to £2. From £2, it just jumped, right? So you're going to get that. SmithKline as well, the same. But the biggest one I was going to mention in that video, and I thought I'll wait until the next video, was the house builders, right? If you looked at if you looked at the UK house builders, wow, what a run, right? On the UK house builders. So everyone was saying, well, the world is going to come to an end. No one's going to do anything. Blah blah blah. And in that video, I said to you, people take it to extremes. Right? They take it to complete pessimism, to complete optimism. What you want to do is when it's down there, you want to buy. When it's up there, lighten up your load, right? Lighten up your load because, sooner or later, right now, the markets have done enormously well. So over the last 2 weeks, you've had the reopening trades coming back strong, right? Very, very strong. Now it's a case of waiting. If you've missed that boat, don't worry. Don't panic. Keep watching us. Keep promoting our videos because there's going to be another time. In the next 2 weeks, and I don't have a crystal ball, right? But I can see it. I can see it from the charts, how far it's extended over. I can see that within the next 2 weeks, maybe 3 weeks, there will be, some air taken out of the system, right? It's natural. There'll be some air taken out of the system. So, look for that. And then it will give you a perfect opportunity to actually get onto some of these stocks as well, right? So that's what I've got to say right now. Just be mindful of the market. where it's moved. If you want to get in, you know, as an investor, it's a really good time to actually invest, right? Sometimes compared to property at the moment, you know, you had an absolute, you know, I made 25% in less than 2 weeks.
Exactly.
I made 25% in less than, no leveraging or anything else like that. My ISA. I did it all in my ISA. Yeah, 25%. In fact, 25% was actually in less than 2 weeks.
Yeah.
But I'm holding it for long term, so I'm not going to sell it. I'm going to add some more if I need to add some more. If it fall back, I'll add some more. But it is that. So, you know, so one of the things that actually afterwards, someone reached out, I think, on the last video, and they said, look, I'm not like you and Kiki. I don't like taking risks. And you know, so I don't want to be, I'm quite risk averse. It's not a case about risk averse, right? It's a case about making, you know, your wealth grow faster. If you, I think we all heard that phrase about, you know, a person had 3 sons and gave them a gold coin each. I'm just trying to remember this. Can you remember that story, Kiki? Can you remember that?
I don't remember it fully, but I get.
Right, but you know, one son buried the gold coin because he didn't want to lose it. The other, you know, that same principle, right? Without risk, there is no gain. You're not moving forward if you do not take some sort of risk. No one's saying take massive risk, but you're not moving forward as a human being if you don't take some risks, right?
Yeah, definitely.
You know, your pensions, and this is what I was saying, you know, your pensions or whatever you're in, they're all invested in the stock market. They're all invested in certain, unit trusts like property as well, right? And you're letting someone else take that responsibility in allocating that cash for you. But you know, you can also do the same. You don't have to be adventurous. Like right now, I know that you were talking about EVs. I'm looking at other things going forward, right? I'm actually looking at the next 10 years. EVs are 10 years. I'm looking at things that will help the EV market. I know that the EV market is going to be there. So what can I look at that is going to help the EV market, right? There's a lot of other things in tech that are coming through that people really, really need to be and looking at. And they don't need to make massive investments, but smaller investments. So that's the market. Do you think I've missed out anything, Kiki?
No, that's perfect. That's brilliant.
I think
it's a good summary. And actually, that last point you added there is fantastic. Well, the last 2 points you added there is fantastic. Number one is on the risk side. You know, the guys, like, if you look at the thing you want to analyze is what your personal appetite is in terms of what you want to achieve. If you want to achieve massive gains and it doesn't align with your appetite for risk, you need to seriously almost, you know, reassess and reanalyze what it is that you want. And, you know, for people that are going out there looking for big returns but very little risk, it's very difficult. It's pretty much near impossible to find these sort of stuff, you know. So you need to become practical and realistic with these things. Analyze does my expectations align with what is in reality. So like Martin said, it doesn't mean you don't have to be a high risk person, but if you are a medium risk person, your more opportunities are going to be in looking at medium risk opportunities. So that's the sort of perspective. But that last point you added on is gold mine. You know, like, don't just think about the stock or the company. Think about everything else that is going to go with it. Everything else that's going to help that industry get. Love that.
It's like you know, the gold miners in the gold rush. Right?
Exactly.
The ones that made money were the ones that supplied the tools, the shovels.
Exactly. See?
No different now, mate. No different. Right. So there's things that I'm looking at. And once we hit the 200, views and everything else, once we get to better views, I'll give you a full lowdown on what is actually going on, and it will just blow your mind. Right? It'll blow your mind on what I'm looking at down 5 years, 10 years down the line.
Here's the deal, guys. If we get this to 200, you'll get my list of stocks. If we get this to 1,000 views, you'll get Martin's.
And trust me on that list. Right? Because it's a combination of that list. It's a combination of all sorts of things, not just one. And the other thing that we forgot to mention as a market summary that I forgot to mention was Bitcoin. Right?
Oh yeah, 100%.
Yeah, yeah. Bitcoin. If you looked at when we talked about it, Bitcoin was, I think, trading at about 1,200, 1,300.
Yeah.
It traded at 1,800 to 18,000. Sorry, 12,000. It traded at 18,000 today. Right now, Bitcoin's not the one to buy right now. You have to wait for a pullback. Yeah, you have to wait for the euphoria and the steam to be let out of the air. But again, long term, Bitcoin is there. You know, but it is looking at different things, and we will try and help you on that journey. Right. You know, and above all, if you've got questions, you know, we want you to interact with us. Right. So if you've got any questions, or even, you know, what you may be looking at, it'll be interesting. If you want us to review something, you know, what you're looking at, and say, well, I'm interested in this stock, could do a quick, we'll do that, you know, and then just put that in the comment section. We'll gladly help, you know, and give you our thoughts. We're not giving you advice, trading advice, we're giving you our thoughts, right? Of
course, this is just for education, insight purposes.
Nothing. And one of the things that I'll be talking on Richard's thing is, look, unless you've got certain accounts open, you cannot have opportunities. And that's what we're going to be talking about. We're going to help people, you know, be able to actually utilize it, help them open an account, so that if they see an opportunity, they're ready to take that opportunity on. Right now, if I say to you that I can see this happening, everyone go, how the hell do I buy that?
Exactly. How
the hell do I buy that?
That's why you need to be on that webinar, guys. Again, that's on the 25th. That link is in the description. It's free. You've got no reasons to not be there. There's no charge, and it's free, and it's from your home. So there's all the best reasons. So make sure you are there. But apart from that, again, we hope you are enjoying these sessions. Give us your thoughts. We need your feedback. We need your comments. Like Martin said, even if it's things you want us to cover, things that you're looking at, or things that you want me to cover or Martin to cover, let us know everything in the comments below. We need you guys to tell us.
And we'll do this every week on the stock side. So maybe next week you do your stock selection. I'll do a market summary. But remember, my market summary is, I think that the market will drop in the next 2 weeks, right? Not the time to actually go out and buy at the moment. Wait for the air to come out, right? And then buy. And then after that, I'll probably do one on a certain couple of stocks that I'm looking at.
100%. Fantastic. Sounds good. Again, guys, 200 views, you'll get my
get us there. Get
1,000 views, then you'll get Martin's one. So we want to be pushing for the bigger target. Trust me on that. But apart from that, again, thank you so much for listening, tuning in. Make sure you subscribe to the channel. Make sure you smash the like button, and make sure that notification bell is on, so you always know when we release a new video, and it will come straight to you and first to you.
Fantastic.
Should we check out? Is that us checking out then?
Yeah, that is. Awesome. Right. Take care, everyone. We'll speak to you next week.
See you later.
All right. Cheers. Bye, mate. Bye.